As a kid growing up, the political issue that gave me the most anxiety, even when I was just a teenager, was the ballooning level of U.S. national debt. I was really young when I first heard the statistic that the U.S. national debt would cost more than $20,000 per U.S. citizen to pay off, a number that since then has absolutely ballooned up to a level of around $106,000 per person as of December 2024, and it's only gone up since then. This is the debt level per person, not per family, and so it accounts for all of the children as well. So for a family of 4 in the United States, their share of the national debt is over $420,000, an absolutely astronomical level. And I, like most people, when I used to hear statistics like that, I would think of that risk in terms of, my goodness, my children or my grandchildren or me are going to have to start paying this off. And the reason I thought about the national debt in terms like that was because that is how I understand my own personal debt. It is something that I actually have to pay off. But when it comes to the national debt, it actually turns out that as I studied economics a lot more, I realized that this was not the actual problem. The actual problem was not ever paying off the debt, because the intention is never to actually pay off the national debt. And in some ways that lessens anxiety, but in some ways it makes the anxiety greater, because there is still a problem with a national debt, a high national debt, but it is actually a lot more risky than mere bankruptcy. And that problem is actually not merely economic, but it can bleed over into the area of international conflict and even changing world orders, something that I'm going to fully explain in this video. And the reason I'm making this video today is because we are seeing warning signs that could push the United States towards a higher level of risk with the real problem with their national debt. And that is because of the trade war that the United States has now started with China without a proper recognition for some of the economic fundamentals that are currently holding our country afloat. Now, as a prelude, it is worth putting things on a historical foundation, because the United States is far from the first global economy that has faced problems like this. And in some ways, that is incredibly concerning, because when we look at former dominant world economies that had global reserve currencies, like Britain or the Dutch Empire, we do realize that, in fact, when they faced situations similar to this one, they did indeed collapse. But it is a little less unsettling when we consider that, because at the same time, though those nations lost their empires, there are still happy people within those countries today. And we see people in the Netherlands and in Britain doing just fine economically. So we realize that the problem the US is facing is not the end of the world, although it might be the end of their economic dominance if they continue to be foolish and if they continue to play with economics that they clearly don't understand. When we look at all of these countries, all of these empires, the US, the British, the Dutch, any country that has ever had the global reserve currency, they have always fallen into the same set of problems. Because they have the global reserve currency, they are able to build up large levels of debt and prosperity back home without people calling them on their debt because they are dominant. But when that debt reaches a level that is unsustainable and the floor drops out from below their empire, from them holding on to their reserve currency status, that is when they lose their future opportunities. And that is sort of where the United States now sits. The problem that the US currently faces is the risk of China, along with other nations, selling their US debt. which will create a ripple effect that will cause more people to want to sell their US debt, which could lead to uncontrollable inflation within the United States. I get that that's confusing. I'm going to explain every step of that and why it works that way. But first, I want to point out something that lets us know that this is indeed a problem. And the reason we know this is indeed a problem is because the US Treasury has gone out of their way to make statements about the fact that this is not a problem. Now, that might at first seem contradictory, but the reality is that the fact that the US Treasury Secretary has actually had to come out and address this issue to the media tells you that a whole lot of people who know what they are talking about began to point out that this could in fact happen. And so in order to prevent a panic, of course the US Treasury Secretary was going to come and say everything is just fine, this isn't a real risk at all. But in order to see if that is actually true, what you need to look at is not the words of the US Treasury Secretary, but the actual economic fundamentals that are causing the experts to say that this is a possibility in the first place. That said, I will of course also caveat that the US Treasury Secretary could in fact be right, but what it comes down to when you weigh the economic fundamentals against the US Treasury Secretary's words is that you see that there's maybe about a 50-50 chance. A 50-50 chance that they're right and that there's nothing to worry about. A 50-50 chance that maybe there is a whole lot more to worry about than most people might even appreciate right now. So with that in mind, I want to now dive into the economic fundamentals so that everybody can understand this. And really, it is my goal that everybody understand this. So throughout this video, I am going to be explaining things in a very simple way, which might be frustrating to people who already know about all these fundamentals, and I'm sorry, but 99% of people don't understand these fundamentals. And so I'm going to explain things so that hopefully, even if you know nothing about economics, you will come out of this video understanding exactly what the risks are and exactly what problems have been created by this US trade war with China. So let's start first with a very important fundamental about why national finance is completely different from personal finance, which is the filter through which most of us understand debt. And the reason national debt is different from personal debt is rather simple. If you personally are in debt $100,000, you do not have a money printer in your basement, or at least you're not supposed to have a money printer in your basement, that will allow you to print $100,000 to pay off your debt. But the government does. Because of this, national debt works completely different from personal debt. Because theoretically, a government never has to actually pay off their debt. They can at any time, if they get into a pinch, print more money and use that money that they printed to pay down that debt. And so because of this, the risks that we have to look at when it comes to national debt is generally not a risk of not being able to pay your bills or a risk of defaulting, but rather the risks that are inherent with printing more money. Now, of course, everybody knows that the main risk of printing more money is that you make the existing money in circulation a lot less valuable, because now there are more dollars chasing fewer goods. And that is true on a fundamental level, but for the United States, the risk is actually much, much bigger than that. And that is because of how much of the US's financial prosperity is based on something small but simple: faith and trust in the US dollar. If you look at every US dollar, you will realize that it is backed by the full faith and trust of the US government, and basically by the economic power of the United States. But the problem is that it's not backed by anything else. It's not backed by silver, it's not backed by gold, and that means that theoretically, if the United States ever wanted to, they could devalue the US dollar for everybody who holds US dollars all over the world. And this is where we get into the real fundamental risks for the United States, which again are not primarily about economics, but are actually about international conflict. And this is where we'll start to see the tie-in to the trade war with China. A big reason that the United States is so darn prosperous, the most prosperous economy in human history, is because we currently hold reserve currency status with the rest of the world. A lot of other countries build their economy on the stability of the US dollar because they trust that while the US dollar experiences some inflation, overall, the US dollar is relatively stable and it will be worth roughly what it was worth yesterday, and they're not going to lose a whole lot of money by holding US dollars. What this means for the United States is essentially easy and favorable trade terms across the globe and access to affordable goods that allow us, from a material perspective, to be far more prosperous than just about anybody else. Because when you think about it, currency has no value in and of itself. The only value of a currency is its ability to ease the facilitation of trade between actual physical goods that actually have value. Because most of the world prefers to trade in US dollars, the United States has very favorable trade, and we have been able to build our prosperity on global trade. This is one of the big reasons we have trade deficits with so many countries. It's not really a bad thing. It actually just means that we have a very strong currency. Now, all of this is well and good, and it can create prosperity for an almost infinite period of time, so long as the United States can behave itself and keep that one critical thing intact: full faith and trust in the US government. But if that full faith and trust starts to decay for any reason, as it now is for several reasons, then the value of the US dollar as a reserve currency begins to decay, and that starts creating inflationary pressure in several ways that very few Americans truly appreciate. The reason for that is simple. Well, it's actually not simple, but I'm going to try to make it simple. When the US prints money, we're not actually printing physical dollars. Usually when we print physical dollars, it's actually just to replace the currency in circulation that's gone bad. When we print money, what we are actually doing is we are essentially selling US debt. The way that it works is that when the United States has a budget deficit, meaning our budget requires more money than we're bringing in revenue, we have to fund that deficit. And the way we fund that deficit is the way that anybody funds anything when they can't afford it. We borrow money. The way we borrow money is by selling a Treasury bond to anybody who will buy it. And this can be an individual. It can be a national government who wants to trade with us. And it's basically an IOU saying, I promise to pay you back this Treasury bond. You guys know how loans work. The problem, though, is that when the rest of the world starts to lose that faith and trust in the US government, they start to lose the faith and trust that the United States will actually pay them back the interest on the Treasury bonds that they owe. And the risk is that countries like China, or any country, could sell those Treasury bonds back on the open market. Now, what this does is it doesn't directly cause inflation in the United States, but indirectly it does. Because when there are a lot of Treasury bonds on the market, it obviously is vulnerable to the laws of supply and demand. If the US is trying to fund a new deficit, more national debt, and get people to buy new Treasury bonds, at the same time that other nations like China or even Europe are trying to sell Treasury bonds, it means that there might not be a buyer for the new US debt. Now, the United States cannot allow this to happen, so what then happens is that the Federal Reserve steps in and it buys the Treasury bonds, basically by creating money out of thin air, and that is how money is actually printed. So if that seems complex, basically, money is printed by the US government when there are not enough other people who are willing to buy US government debt. Now, because of all of this, there is an inherent risk. And that risk is that if anybody owned enough US bonds, enough US debt, they could weaponize that debt by dumping all of those bonds on the market at the same time. This would cause potentially panic sell-offs of US bonds, and that could magnify the effects beyond just the number of bonds that this adversary held. And that in turn could force the United States to print a lot of money to buy the bonds that the US is trying to raise to cover their new budget deficit. It really puts the United States in a risk where another country can force us to have massive inflation if they decide that we are being adversarial to them or they want to be adversarial to us. And this inherent risk, because China does in fact own a whole lot of US debt, a whole lot of US Treasury bonds, is why the US Treasury Secretary recently came out to say there is no risk of this happening. Because, of course, there is a risk of this happening after the US started a massive trade war with China, and the Treasury Secretary has to reassure people so that a panic sell-off doesn't happen prematurely. What we see in reality is that shortly after the United States announced its massive trade war against basically the whole world, especially including China, is that there was indeed a massive sell-off of US Treasury bonds. Now, we don't know exactly who sold these. There's some speculation that it was China, but we really don't know. But what it does show is that the US is at a very vulnerable position, and they're already in a place where they have to make statements to try to cover up their vulnerability among the general public. And this vulnerable position is really self-inflicted, because in the past, the risk of China selling off treasury bonds, while real, it was limited, because China alone did not have enough power to overwhelm the United States. They could create a small level of inflation. It would be inconvenient, but it wouldn't be the end of the world. In order for a really tragic economic scenario to take place, it would require not just China to sell off their bonds, but it would also require other nations who hold US debt, in addition to China, to do so as well at around the same time. And up until very recently, that wasn't really feasible. It wasn't even plausible that all other nations would decide to sell their US debt all at once. That has changed recently as the US has started a trade war with the entire world and given the world less incentives to want to hold US dollars, whether those US dollars are in the form of debt or otherwise. When you think about it, if you think about the fact that a sell-off of US bonds could be used as a weapon to hurt the United States, that also implies the opposite. It implies that the purchasing of US bonds could be used as a tool to help prop up the United States. And for a long time, countries like China have purchased US bonds, arguably, at least partially, for that exact reason. Because the United States has been China's main trading partner by far. China actually, for a long time, has wanted a stable US economy because the US dollar is the reserve currency and it is the basis of so much of their trade. And so arguably for a long time, China has actually purchased US Treasury bonds in part because it seemed like a good investment, and also in part to help protect the US economy from overinflation so that they could continue to benefit their own economy by selling goods to the United States. It was a win-win scenario. And for a long time, this has been true. A healthy U.S. economy meant a healthy Chinese economy, and vice versa. There was nothing wrong with this relationship. I mean, there were problems here and there, but at a fundamental level, there was nothing wrong with the relationship. It was mutually beneficial, and this mutually beneficial saw both of these nations rise to be the two largest economies in human history. But of course, now we see the U.S. either not understanding that, not comprehending it, or not caring about it, and taking out the bottom of this system that has worked so well for so long. And so what has been a tool to help prosper the United States, foreign nations purchasing our Treasury bonds, is now a weapon that these other nations can use to retaliate against us for attacking them in a trade war. And it is a genuine economic tool that could do genuine economic damage. I want to reinforce what I just said, because it's incredibly important and very few Americans truly understand or appreciate this. A growing Chinese economy is not in and of itself a threat to the U.S. economy or to U.S. national security, not in and of itself. And in fact, up to this point, a growing Chinese economy has been a massive benefit to the U.S. economy by being a large deflationary force that has helped our massively overextended country with a massive national debt, has helped prevent us from going over the edge in the inflationary spiral. And they've done that in two ways. The first is the most obvious. A growing Chinese economy provides the United States with very cheap goods, allowing us to buy the things we want at a lower cost, preventing prices from going up in that way. But there's also this other deflationary aspect of the Chinese economy, because we're such good friends with them from a trade perspective, because we buy so much from them, they want to help keep our economy healthy. And so they keep buying our national debt. In effect, they keep lending money to us to keep our prosperity going because it is mutually beneficial. This is important because it also speaks as to whether China would become a military threat to the United States. In the former world, China never did become a military threat to the United States. Bluntly stated, probably because they had no reason to. As long as the United States was China's biggest trading partner, and that was prospering both nations, China had absolutely no incentive to want to get into a conflict with the United States. And this fact may have protected not just the United States, but also other countries in the world, countries like Taiwan that China claims and wants to attack, or at least they've said as much, but that they couldn't win if the US supported Taiwan. They know that the United States doesn't want them to do that, and because the US has been their biggest trading partner, they have been unwilling to sacrifice their market and cause those kinds of wars. But as the US decouples from the Chinese economy not only now becomes a threat to the US economy, but they also become more of a threat to the US militarily, because now we've removed the number one incentive for them not to engage in a military conflict with us. Now, the biggest irony of the whole thing, and maybe the saddest part, is that when you talk to people in the United States about why are we making these decisions, why are we making these moves all of a sudden, what people will usually say is they will say, well, this is an attempt to reevaluate our trade relationship with China to help boost incomes back here in the United States to promote U.S. jobs instead of buying from China, and thereby help us lower our national debt, which is becoming such a big problem. And the irony of this is that even if this is true, and even if it happens exactly as people say it will happen, which I don't think is the case, but I have other videos explaining that in depth, even if it is true, and the United States becomes more prosperous, and we pay down our debt a little bit, and it doesn't keep rising as much, is that even by doing that, because of the way we have done it, we will have triggered the risk events as to why you don't want a high national debt in the first place. In other words, the main reason you don't want a high national debt, as I've just explained, is because of the vulnerabilities that it creates for you when it comes to the potential for inflation and international conflict. Those are the risks of having a high national debt. And so when you go and you cause trade wars with China that will then create inflation and create international conflict, you have just in fact created the problem that you were trying to solve. The reason that a lot of people don't realize this is, again, because of them thinking about national finance in the same ways they would think about personal finance, which is why I tried to explain things so carefully at the beginning of this video. What we are doing right now is sort of like if you had a boat with a hole in it. Because let's be honest, I mean, the US economy isn't perfect. The US relationship with China isn't perfect. It's a boat with a hole in it that's taking on water. Let's just say that this boat is taking on water, but it's manageable. You're at a point where you can bail that water out. It's inconvenient, but it's not the end of the world. That's sort of what the United States has right now. We have economic problems, but they're manageable, and that's factually true because the United States, for all of our problems, we are the most prosperous economy in human history. And what we are doing is drilling a hole in a different part of the boat to take that material from that hole to plug the other hole. We're not fixing our overall problem. We're just moving the problem to a different area. And the problem with that is that not only are you not addressing the problem, but in changing the way things are done, you create risk. There is a risk that this new hole will take on more water than the old hole was taking on. As you remember, in this situation, we're talking about a boat where, as it was, you could bail the water out, and it would be perfectly fine, although inconvenient, and that would take effort. Now you're potentially in a situation where the boat might sink because if this is bringing in more water than the previous hole, that might be unmanageable. And if you have problems with the current system in the United States, you just have to consider that though the current system is not perfect, it has factually created the most prosperous society in human history. And the risk is that the next system will not be better because, in fact, no economic system has ever been more effective than the one we have now. To think that a new economic system would be more beneficial is speculation at best. Most likely, it is going to be less effective than the system you have now. And so if you have problems with the system as it exists now, changing the system isn't going to make those problems better. It is going to make those problems worse, because now you're going to have the same problems, but you're going to have a weaker system and a less prosperous system overall to help you address them. To be clear, the risk that the US economy currently faces is inflationary pressure from several different directions. First, there is the inflationary pressure that is on purpose, where we are trying to force people to pay more for everyday goods and services. That is the point of a tariff, whether it's on China or any other country. You are trying to make goods that were previously cheaper to purchase artificially more expensive so that people buy, theoretically, American alternatives that are a higher cost. So we are intentionally trying to create goods that are more expensive, and so that's going to create inflationary pressure in one direction, while at the same time, because of the nature of the way we're doing this, we are putting ourselves at risk of inflationary pressure from other countries selling off our Treasury bonds, which will force us to print money in order to purchase those bonds and prevent our government from defaulting on its debt. So that will be more inflationary pressure. And so you will see prices going up potentially from both directions. And the risk of that isn't just higher prices. The risk of that is that things could get so expensive that Americans then decide they don't want to purchase anything. If that happens, the economy freezes up. companies cannot sell things because prices are too high. And the reason for that is artificial, so that it can't be fixed by supply and demand and market fundamentals. Because of that, companies are forced to close up shop or to lay people off in order to make up their expenses. And so then people lose jobs, and it becomes a spiral. Because as people lose jobs, then there's even less of an incentive, less of a possibility of them participating in the economy. And that causes things to get worse and worse and worse and worse. And if it is not dealt with soon, and these sell-offs do happen at a large scale, it could create a point where the US government has to do major intervention to keep the economy from totally icing up and freezing itself out and making massive economic changes. As that happens, obviously the world is not as confident in the US dollar, and somebody else comes to hold the reserve currency. And while it is not the end of the world, the economic prosperity that Americans have gotten used to could go away. All in an effort for them to try to grab a bigger piece of the economic pie, which they didn't need because they were already the most prosperous nation on earth, that instead turns around and hurts them in the process. It's a lesson that we don't want to have to learn, but unfortunately, when we are greedy and when we don't understand economic fundamentals, it really could happen. Now, I'm not trying to create a panic. I'm not saying that this is guaranteed. I'm saying that these are the forces that we're playing with. And there are so many ways that if the United States continues to be adversarial to the entire world, that our economy could drastically suffer as a result. Just like how Russia's economy is now drastically suffering in so many different ways because they chose to be adversarial towards Ukraine and received international sanctions as a result. As the United States continues to be adversarial in trade wars, as we continue to be adversarial talking about wanting to take Greenland, Canada, the Panama Canal, whatever else we come up with next week, global economies might be willing to put economic pressure on us, and we really don't understand the forces we're playing with. Now, everything I've discussed in this video is an example of the risks of what I call Ragebait politicking, where people, their goal is to get people focused on the downsides of something without appropriately also mentioning the upsides. So, for example, in the United States, there is a lot of Ragebait politicking, latching onto people's anger about whatever their problems, and instead of taking responsibility for those things, they point the blame in the direction of China. And we talk about how China has cost the US so much money, we talk about how China has cost the US so many jobs, etc., etc., and we do not fairly also represent the benefits that we have gotten from engaging economically with China. Because one side is always shown and the other side is almost never shown, and if we're honest, never fairly considered, that pushes people in a direction. And because of our own foolishness and not wanting to hear the other side, we end up destroying ourselves. What will unfortunately often happen in this type of Ragebait politicking democracy is that if we go back to the hole in the boat analogy, they will gesture wildly at the hole in the boat that they have just fixed without drawing any attention at all to the other hole in the boat that they created in order to fix that hole. And you will have a lot of people who are pumping their chest and so excited that they have fixed a hole over here, not realizing that they now have a new hole that is causing the boat to take on more water than it ever has before, and that will in fact ultimately cause the boat to sink. But of course the politicians don't draw attention to that one. I'm not a hole maker, I'm a hole fixer. That's why it's so important for the general public to look at the whole scope of the whole system and not just one aspect or the other. Because a lot of times politicians do not adequately understand that the boat is an entire system where all the parts impact all of the parts. It is our job as people who care about the integrity of the entire system, and not just about getting elected, to do the hard work of understanding how things work and holding politicians accountable. Now, this happens to a lot of democracies. If it happens to the United States, it will not be the first time in human history, not by far. We will just be the latest in a series of failed empires. I don't want that to happen. I think the United States, while we got some problems right now, we have been good for the world overall. And selfishly, as an American, we've been good for ourselves too. And that is part of the reason that I do what I do on this channel, where I objectively try to bring in all of the facts and take these complex subjects that a lot of people don't understand and bring them to clarity and reality so that people can see the actual cause and effect and what is actually going on in the world, as opposed to what they are often shown in the media, which is a one-sided, incomplete perspective. Now, the reason I'm able to do that is because I am an independent analyst. I don't work for a newspaper or any other organization, which means I don't have to be forced to talk about one particular perspective. I can go wherever the facts take me. I think that generates unique analysis, and if you appreciate that, before you go, if I could ask you for a quick favor, if you would consider becoming a patron of this channel, that would help support me and my ability to remain independent and keep creating videos like this one. So if you got some value out of this and you think it's important, you can consider doing that. Just scan the QR code on screen or visit the link in the description of this video. With that said, I'm going to close the video out. Thanks for watching, guys. I'll see you on the next one.